Hi everyone, welcome to Condo Academy episode 4. We're calling this one FAQs Day Tuesday, and I'll explain what that means in a sec. And we're going to go over our top 5 Toronto condo myths and our state of the condo market address. If you are listening to our podcast on iTunes, make sure to go to condoacademy.ca for all of our videos. My name is Giovanni Marsico, and I'd like to introduce you to my partners, Susan Taglian, Roy Bhandari, and Amit Bhandari. We are with Sotheby's International Realty. We are sales representatives. And I'd like to introduce you to FAQs Day Tuesday, a new feature we're going to host every single Tuesday. So a few weeks ago, we started a contest where we asked our investors to tell us their top condo investment questions in exchange for the opportunity to win an iPhone 5. So we've received over 300 amazing questions this far. And every Tuesday, what we're going to do is release an FAQ video just like this one, answering some of the best questions we received from this contest. Now, the deadline for entries is October 31st, so it's not too late to enter. If you have some great questions, visit talkcondo.com. Now, here are some of the questions that we've received that I'm going to address in this video. Question 1, is there a bubble in the Toronto condo market? Question 2, are there too many condos being built, and is there an oversupply of condos in Toronto? And thank you, Richard, for that one. Question 3, what percentage of buyers of pre-construction condos are investors, and how does this affect the market? Thank you, Joanne. Question 4, are there too many foreign investors buying condos? So the way we're going to address these questions is by going over what we call the top 5 Toronto condo myths. And these are the most common myths that we hear from our clients, from the market, and from especially the media. So myth number 1, there are too many condos in Toronto. Myth number 2, there are too many investors in the market. Number 3, the majority of investors are speculators looking to flip in the short term. Number 4, the majority of buyers are foreign investors, in quotations. And number 5, there are thousands of empty vacant units in the city, one of my favorite ones. So we'll start with the first one. There are too many condos in Toronto. In actual fact, we may eventually have a housing shortage. And before you commit me to the asylum, let me explain. And I'll start with a question. What is the number 1 reason for real estate growth in the GTA? The answer is immigration, or more specifically, net migration. And where that comes from is, number 1, most importantly, immigrants from other countries coming to Toronto, other Canadians moving to the big city for either work or school, a new trend that we're calling urban cottages. For those of you familiar with the GTA, these are people who live in the 905, 705, and 519 area codes who are buying property downtown Toronto as their urban cottage, and in general, overall population growth. So in this chart that we're showing in the video that we've received from RealNet with statistics from Stats Canada, the green line is the historic population. The red line is long-term projection for population growth in the GTA. And this yellow line is home starts. So even though the yellow line goes up and down, it stays pretty constant with the growing population, which means we are perfectly housed. So if the net migration continues, the demand will mean we need 900,000 to 1 million new units just to satisfy the demand of new people moving to the city. But the problem, and not necessarily a problem, but what's happened in the market is that in 2005, the government instilled the places to grow policy, which meant, or also known as the green belt. So anywhere you see in green on this map are places that are protected from density. So developers either have to build outside of the green belt if they want to build homes or low-rise detached homes, or inside of the green belt. And since there's no more space to build wide and far, they have to build up, which means condos. Now this chart shows the home price index for new homes, the blue being high-rise and the green being low-rise. The index price for low rise is $609,369 as of August of this year. Not too many first-time buyers can afford a $600,000 home. And the index price for high rise is $436,460. So the bottom line is first-time buyers entering the market can no longer afford detached homes. Condos seem to be the only choice for a first-time buyer in terms of affordability, as well as being able to be close to work. And if you notice on the chart, it seems as though the high-rise number has dropped 4.8% in terms of the end price. But what they don't mention here, and especially what they don't mention in the media, is that the average size of the units have dropped by roughly 100 square feet. So if you do a measurement of price per square foot, the actual price has gone up. Now, to satisfy demand of roughly 80 to 100,000 people moving to the GTA every year, we need roughly 40,000 new homes, be it condos, detached. In the 70s, all of that was low rise, meaning subdivisions, new homes, with only 4 condo projects making up roughly 1,000 high rise units. And every year since then, that low rise number has shrunk and the high rise number has grown. Until 2010, which was the first time high rise outsold low rise. And because of the Greenbelt policy, there is very low inventory of low rise. As of August, it's only 5,950 homes. So now, is there an oversupply? For those of you who track the markets, last year was a record-breaking year for high-rise sales with over 28,000 new condo sales. And to further perpetuate the fear and panic, the media keeps talking about how there's 100,000 condos in pre-construction or under construction. So doesn't that mean we have too many condos? The issue is what's called delivery. So here's a chart showing scheduled high-rise occupancies by construction. So the blue lines are completed condos. The green lines are condos that are under construction, and the orange is pre-construction, which means a unit has been sold but has not started construction. This specific chart shows the end of 2010. So let's say the beginning of 2011. And it shows that in 2011, we would have expected over 20,000 new condos to be occupied. The average being always around that 15,000 mark. Let's see what happened by the end of 2011. That number shrunk to below 15,000. And that 15,000 number seems to be the industry capacity. Now look at 2012 and 2013 on this chart. It looks even scarier. 26,000 plus in 2012 and more in 2013. Let's check where we are at right now for 2012. We're already below that 15,000 mark. So what happens? And the issue is we just don't have enough crews, enough cranes, enough capacity to be able to build all these condos. So they keep getting pushed and pushed. This 2013 line, again, looks very scary. I can promise the same type of thing will happen next year where it won't be as high as it seems right now. But when you talk about 100,000 condos, it seems scary. Myth number 2, there are too many investors buying condos. The actual fact is that Toronto can't grow without investors. So let me ask you a question. How long does it take to build a new detached home? And the answer is usually anywhere from 90 days to up to 2 years. Let's say the average is 1 year. So if you were to buy a brand new home from a developer, within 1 to 2 years, you're moved in. Now, how long does it take to build a new condo? The average is roughly 4 to 5 years, and sometimes 6 or 7 if it's a very large project. So when someone decides to move, how long do they typically wait? How much of a time frame or time window do they have between when they decide to move to when they actually move? And you know, the average closing in the resale world is 60, 90, 120 days. So how many people are going to commit today to moving within 5 years? Very few. And you know, someone moving into a home or condo, the term we use in the industry is end user. End users do not want to wait 5 years to move into a new home. So here is the real Toronto housing issue. there is little to no more low-rise inventory. Condos take 4 to 6 years to complete, from the day they launch sales to the day they are finished and people can move in. And we've shown that delivery is only 15,000 units per year, but we need 40,000 total homes just to satisfy the demand of people moving here. Now, here's the biggest issue. Condo developers cannot start construction until the project is over 70% pre-sold. And it could be 75%, it could be 65%, it could be 80%. It depends on the arrangements they have with whatever institution is providing them financing for construction, which means they need to pre-sell the actual building in advance before they can put one shovel in the ground. And let's go back to the original problem. End users won't buy until close to closing or completion because they don't want to wait 5 years. So who's going to buy those first 70% of the units of the building to allow developers to start construction? For example, in a new condo project with 300 suites, a developer has to sell over 200 of them before they can even put one shovel in the ground. So without investors, the supply greatly diminishes because the developers can't build or launch projects due to the fact that they can't reach their 70% pre-sale targets. And if migration stays consistent, demand will eventually skyrocket because there's no supply, which means prices go up. Now let's address myth number 3 and 4. The majority of investors are speculators looking to flip, and the majority of buyers are foreign investors. And I was actually at a meeting a few weeks ago where we actually, a local lawyer said that they heard 80% of the market was foreign investment, which made me laugh. But to get the facts, we decided to do a survey of our investors. And we have a large database of condo investors who all invest in the Toronto market. So we decided, instead of guessing, let's just ask. And here are the results from our survey. One of the questions was, where do you currently live? 59% was the first answer with Toronto, and answer number 2 was 10% in Mississauga. And when we tracked all the numbers, 98% of the people who answered lived in the GTA. They do not live abroad. One of the other questions we asked were, what country were you born? 40% Canada was the first answer, and then the rest of the answers were split among dozens and dozens of countries. So we feel the biggest misconception is that a lot of the investors were not born in Canada, but they live here. So they were foreign, but they're now local. And then we asked, what is your investment goal with your condo? Do you plan on flipping it in the short term? Do you plan on flipping it right after closing? Do you plan on renting it out short term, long term? Do you plan on living in the unit eventually? And the number 1 answer was long-term rental with 43%, followed by 32% saying they would rent it out and eventually live in the unit, either themselves or a family member, such as a child who has to go to university. And please note that according to the CMHC, only 10 to 15% of new units in a building are listed for sale within 12 months of registration. That means that those other units are either lived in or rented out. They are not flipped or sold. So myth number 5, there are thousands of vacant condos in the downtown core. My favorite myth. And here's the truth. The vacancy rate downtown is less than 1%. Many downtown sales representatives, people in the industry, are seeing multiple offers on leases. To us, this is incredible. Our past 5 or 6 leases have had multiple offers. There was one where an agent called saying, you know what? We don't even want to see the unit. We're just going to put an offer down because we want to avoid the multiple offer situation. And these are units leasing above asking price within 1, 2, 3, or 4 days of the listing going up. This market is insane. And the condo rental market is probably one of the hottest segments of the GTA real estate market right now. Now, for the past few years, the average lease rate was approximately $2.50 to $3 per square foot downtown. So if you multiply the size of the unit by $2.50 or $3, you have the average monthly rent. And only luxury buildings or areas like the Yorkville area were above the $3 per square foot mark. But what we're seeing now is that many units downtown are leasing above $3 per square foot. And as an example, we looked at the Regent Park redevelopment by Daniels, and there are units, studio units, leasing above $325 to $350 a square foot. That's the same type of pricing you would have seen in Yorkville a few years ago. So why is this happening? Well, in the 70s, after the start of rent control, many developers stopped building rental apartments because they just weren't profitable, and they shifted their focus to building condos. And condos are now the new rental supply in Toronto, with the lowest vacancy rates ever. And there's also a demographic shift. Many young professionals are choosing to rent downtown to be close to work, since they can't afford to purchase. And also, because of the delivery issue we mentioned a few minutes ago, a lot of the people who are expecting to move downtown are delayed. So they're now forced to rent, causing more demand for rentals. And most importantly, a lot of people who are afraid of making a purchase because of all the media hype and fear and panic, they're choosing to rent as well and holding off. So now that creates even more demand for rentals. So let's talk about the state of Toronto's pre-construction condo market and why fear and panic are going to create amazing opportunities for investors. Fear and panic are actually your friend. And I'm showing on the video one of the covers of a magazine that we've been seeing for actually the past 4 to 5 years, but this was back in March of this year. So let's talk numbers first. This is a chart from RealNet Canada. And again, RealNet tracks all new home sales in the GTA, both low-rise and high-rise. And if you look from year to date from January to August, 2012 is the third best on record. So last year from January to August, we had 18,055 high-rise sales. This year, we had 13,591 from January to August. Now, the media make money by selling negative news, because if they had a headline that said everything is cool, don't worry about it, most people wouldn't buy the magazine. But if they say the world's coming to an end, it's 2012, then more people want to buy, which is actually in our favor. And here's why this is amazing. If you own a pre-construction condo that's currently under construction, or if you are planning to invest, here's our predictions or projections. Many investors are going to sit on the sidelines right now because of fear, which will cause many developers to wait until 2013 to launch new product. And we're starting to see this in the market already. Scheduled projects for the end of 2012 are now being pushed to 2013. This is because they don't want to launch and not reach that 70% sales target. So they're going to wait too. And like I mentioned before, many end users, people who want to move in, are going to consider renting instead of purchasing, which again will increase that demand for rent. So if you currently own a pre-construction unit, you are actually positioned to take advantage of the soaring rental rates. You can ride this cash flow wave until the market picks up again, at which point you now have more equity in the unit because the tenant was paying off your mortgage, and you can sell at higher prices in the future. And one of the biggest concerns in the past about the Toronto condo market was that it was difficult to have positive cash flow on rent, which is no longer the case, and that's something we'll bring up in our next video. And keep in mind, interest rates are still at an all-time low. All of the fundamentals are great for investment, but interest rates cannot stay low. So once they start to creep up, all of these panicked renters who don't want to have higher interest rates on their mortgage will start locking in and purchasing again, which again will increase the values. So where are the current opportunities for investors? Well, in our opinion, the next 12 months are going to be a buyer's dream. If you're looking for cash flow, look for anything occupying within 24 months for that rental income. This could be either from what we call inventory deals, which means condo developers who are under construction, they have units remaining in their building for sale and they want to get rid of them, so they'll offer special incentives or deals. And as well, look for what's called assignment listings. And if you don't know what an assignment is, we'll be explaining what they are in our next FAQ video. Now, if you're looking for more long-term appreciation or capital preservation, what we would suggest is what we call a high-profile mega tower launch. So get in on the ground floor of any huge skyscraper, massive project that, most importantly, will occupy in 2016 or later, so that you ride out the wave and you're into a whole new real estate market. And if you need advice on how to choose a good investment and how to protect your investment, speak to a real estate professional or join the Insiders Club at talkcondo.com. So next Tuesday, here are the questions we're going to address. One, how does a condo launch work and what does this whole VIP thing mean? Is it better to flip or sell before closing or sell after closing? What is a condo assignment and how does it work? Can you make a monthly profit on rent? And what are the advantages of buying pre-sale if prices are the same as resale? So thank you very much for listening. My name is Giovanni Marsico. If you like this video, please include your comments on our page at condoacademy.ca or on the YouTube video. And please share it with your friends on Facebook and Twitter. And if you are interested in any pre-construction condo investing, for all of our secrets, all the news and buzz, you can join the Insiders Club at talkcondo.com.